Bismillahirrahmanirrahim. Assalamualaikum. Okay, welcome back to our tutorial class. So for today, we are going to continue on discussing for chapter 2, issuance of shares and loan capital. So as you can see on the screen, can you see the screen class? Question taken from your practice kit? Sentosa Berhad? Okay, so let us try this question. First of all, you have to read the question. Okay, and basically this question will require you to prepare the relevant journal entries to record the above transaction and to prepare the statement of financial position extract where you just have to show the equity and liability section only. Okay, so first of all, what you need to do is that you have to identify the accounting period. For every accounting question, you need to find the accounting period so that you know the correct reporting period that you are preparing for. So in this question, you are preparing for the transaction for the year ended 31st December 2003. So these are the information given to you. So the above one here is the statement of financial position as at 1st January 2003. Which is the beginning period. So this is the beginning period. What does it mean? All of these, okay, are the balance brought down. Balance brought down. So here you have the balance brought down. Okay, so all here are the balance brought down. Okay, you are going to prepare for the journal entry to record all the above transactions. So how many transactions do we have? We have to read one by one to identify the transaction occurred during the year. Okay, let us read number one. Okay, number one is about, okay, based on the information, this is IPO. Okay, this is IPO. What is IPO? IPO stands initial public offering. For whom? For which account? For which equity? Ordinary share capital. So this is information for number one. Number two is IPO again. For what? For which equity? For preference share capital. And number three is regarding issuance of the venture. Okay. So there are three transactions. So there are three transactions here. Number one is issuance of ordinary share capital, IPO. Okay, number two is issuance of preference share capital. And number three is issuance of debenture. Therefore, when you prepare your answer, this is how you are going to organize your answer. First, you will give the heading of the first transaction of your journal entry, issuance of ordinary share, followed by issuance of preference shares, finally, issuance of debenture. This is how you organize your answer. And remember, you have to record the journal entry, right? So you must have the debit and credit, and you must have the debit column and credit column. Okay, let us start with the first one, issuance of OSC. What you need to do is that you have to find the amount that you issue and amount that you receive. This is the first one. Okay. Number two, you need to know the issue price. Okay. And number three, you need to know the shares subscription. Okay, let us find the amount issue. How much do you issue? Okay, it is stated the amount that you issue 500,000 units. How much that you receive? You receive by, it's not counted yet, but you know you have received more by 100,000 compared to what you issue. Therefore, how much the amount that you receive? Amount that you receive is 500,000 plus 100,000. Okay, this is the amount that you actually receive. That is 600,000. Okay, so the amount that you receive is 600,000. Alright, so what does it mean here? Okay, you have 500,000 versus 600,000. You have an oversubscribe. What shall you do? The oversubscribe should be reject and refund. Okay, so it's mentioned here, excess application monies were refunded. Okay, how much the issue price? RM1.65. Okay, the share subscription tadi kita tahu dia ada excess lah. Excess. By how much? By 100,000. Okay, so let us do the answer together. The first step is to record the amount that you receive. How much that you receive? 600,000. How much is the issue price? RM1.65. So this is the amount that you receive, 990,000. But somehow, you only issue for 500,000. So what you need to do? You have to refund. You have to reject and refund the excess. How much? 100,000. So the amount that you have to reject and refund should be debit ordinary share application and credit bank. Why credit bank? You have to return the money back to the unsuccessful applicant. So this is the amount that you reject and refunded. Okay, last but not least, you will allot the share, okay, to the successful applicant, which is called the shareholders. So how much is the successful one? 500,000 units times with RM1.65 is 825,000. Or you can verify by minus the 990,000 with 165. You should get equal. You should get equal. This is how you find. Okay, this is one of the way, or you can find by this way. Okay, done with OSC. Let's move to the preference shares. Okay, how much is the amount issued for preference shares? The amount issued for preference shares is 800,000 unit, but you have undersubscribed by half. So, amount issued is 800K, but amount received is 400K. So, you have undersubscribed. You don't have to reject a refund. Instead, you just have to record the amount that you receive. That's all. And allot the share. And this is the issue price. So, very straightforward. Okay, debit bank with 400,000 times with 80 cents. So, this is the amount to be debited and credited. Debit bank credit preference share application. And straight away allot the share. Okay, allot the share. You don't have any reject or refund. Okay, allot the same amount. Debit preference share application, credit to preference share capital. When you do the allotment, you must transfer to where? The capital account. Which account? Depend. If you are doing ordinary, state ordinary. If you are doing preference, state the name of the share. Okay, so that is the answer for issuance of preference shares. Last one, we have the next transaction. Okay, as for the debenture, remember I have taught you, we need at least 4 types of information. But the full package will be 5 lah. What are they? First, you need to know the nominal value of your debenture, which is this one, 50,000. Number 2, okay, you need to know the issue price. So issue price, you are issued at a discount of 5%. So you issue at 95 or 95%. Okay, number 3, you need to know the nominal interest rate. How much? This one, 6%. 6%. Number 4, you need to know the market value interest rate or effective. Another name is effective. Effective interest rate. This one, 10%. And last one, you need to know any information regarding issue cost, if any. Do you have any issue cost? Yes, you have issue cost of 5,000. Okay, so complete, we have all the information, but somehow issue cost may not be given for certain questions. So if any only, if you have, then you have to include. If not, just proceed how to calculate the what we call the fair value, without minus the issuance cost. Okay, first we have to find the fair value of the debenture. So this is how we get. How do we get 42,500? You take the nominal value of the debenture times with the issue price and minus for the issue cost. So this is the fair value of the debenture. Step number 2 is to calculate for the finance cost. So you take 10% the effective interest rate times with the fair value. Okay, this is how you get in the first step, and times with prorate. Why do we have 3 months to prorate? Because back to the question, okay, your accounting period starts from where? I have just now, okay, your accounting period start on 1st January, year 3, and it ends on 31st December, year 3. When you calculate interest, you must calculate on timely basis, right? Since the debenture is started on 30th September, somewhere here, okay, oops, somewhere here. So the interest on debenture should calculate from October, November, December. So 3 months only. So that's why you times with 3/12. Huh? So you will get 1,063 ringgit, and calculate for the interest paid. You use the nominal interest rate times with 50,000 and times with 3/12. So you get 750. So class, you can see the amount that you need to pay is 1,063, but you only pay 750. Therefore, this is the difference which to be transferred to debenture account. Okay, last but not least, this is just a meal of closing the finance cost transferred to the retained profit. Or somehow you may use SOPL, but you usually retain profit lah. Okay, next is to prepare for the statement of financial position. You just have to show the extract of equity and liability only. So for equity and liability only. Okay, how to prepare? Go back to your old statement of financial position. So this is your opening balance. So we are going to cater this part only. We are going to cater for this part only, equity and liability section. So equity, we will have what? This is your equity. First, we have the share capital. Number 2, we have the reserve. Okay, as for liability, we have the non-current liability and we have current liability. Okay. So this is the old figure. This is the old figure, old balance. You have to adjust for any changes. Ordinary share capital for sure we have, because we have issued share. So of course we have add similar to preference share. Okay, return profit we minus because we do have adjustment for finance cost. Okay, there is no changes for general reserve. Okay, debenture, since we issue debenture here, okay, we issue debenture, so yes, we still have adjustment. As currency, no adjustment. So general reserve and currency will maintain the same, but for ordinary share capital, preference share capital, and reserve, return profit need to be adjusted. And debenture, we need to adjust. So how to adjust? Back to our answer. As you can see, okay, we have to find, Okay, let me rub this one. Okay, we have to find for the accounts affected. So the first one, we do the equity section. So for equity, we have to look for the OSC and PSC. Right? So look for OSC and PSC. Is there any adjustment for those accounts? Yes, we do have adjustment. One is here. Yes, you can see here. And one is here. Credit means what? Credit means you add. So this amount, 825, okay, will be added up. Okay, and this 322 will be added up. So we will add 825K and 322K for both OSC and PSC respectively. So this one will increase the value of the share capital. Therefore, your answer is this one. About 3,075,000 and 2,320,000. This is the old one. This is the old one. Okay, based on this question. This is the old one. So you have to adjust for the new one. And you will get this value in RM. As for the unit, okay, as for unit, you can go back to this one, 1,000, 1,500,000 and 1,000. Okay, based on this one, we will add 500K, okay. And for this one, you only add 400K. I hope you know how do we get 500K and 400K, I already explained. So in total, you will have 2 million, and for preference shares, you will have 1.4 million. Okay, next reserve, return profit. The old one is 1,100,000. Okay. Since you have adjustment here for return profit, debit means what? Debit means minus. Debit means reduction in the profit. So this one will be minus from the return profit. So you will minus 1,063 ringgit. So that's how you get this one. 1,098,937. Okay, general reserve remain the same. Okay, non-current liability. Last time you have 100,000. So this is the old one. Okay, based on the answer adjustment just now, you have adjustment. First, credit 42,500 and the other one credit 330. Credit means what? Increase in the liability. So you will add these two. So you will add these two. You will add 42,500 and 310. Okay, so this is the final answer of your debenture. Okay, current liability, there is no change. So just maintain the amount. Okay, that's it about Sentosa. Can we proceed to the next question, class? Let us proceed to the next one. Okay, we have done requirement for A and B. Okay, next is the question 2, Symphony Berhad. Okay, again, as I mentioned to you, you have to read the question first. Okay, basically the question are just the same. You are required to prepare the relevant journal entries to record all the above transaction and prepare the statement of financial position. But this time you have to prepare this section only lah. Right? It does not mention for any section. You just have to prepare what do you have, the information that you have based on the current question. Okay, so identify the transaction. Let us identify the transaction based on number 1, 2, 3, 4, and 5. Okay, number one is about, okay, this is IPO, ordinary share capital. Okay, 1 and 2. Okay, sorry. 1, 2, 3. It is continued. Okay, 1, 2, 3. IPO for OSC PSC. Okay, number 4. Bonus issue. Bonus issue. And number 5. Issuance of debenture. So we have how many transactions? 4. And we have 4 transactions. So please organize your answer nicely based on the types of transaction. First, issuance of shares, followed by issuance of preference shares, continue by issuance of bonus shares or bonus issue, finally issuance of debenture. Okay, I'm not going to explain in detail as what we have done in Sentosa Berhad, because I believe at this stage you already understand the step by step how to answer the question. So for this question, let us just focus on the final answer together. Okay. As for the IPO, I would like to remind you the information that you have to extract are the what? First, the amount that you issue, and then followed by amount that you receive. Okay, you will compare these two, and then of course you need to find the issue price, and finally is you have to find it if there is an oversubscription. If you have an oversubscription, then you have to reject and refund. So basically, this is the step for you to answer IPO. Okay, so ordinary share, the amount that you issue, we go one by one. We will answer OAC first. The amount that you issue is 15 million units at a price of 80 cents each. And this says that the application for ordinary shares will oversubscribe by 1 million. And the excess application will be refunded. Okay, so let us answer the question. So amount, okay, let us answer the question together. Firstly, record the amount that you receive. Why you receive 60 million? Because you have an oversubscription by 1 million. So 60 million times with 80 cents. This is the amount that you actually receive. But since you only issue, okay, 15 million, so you have to reject 1 million. So this is how you calculate 1 million times 80 cents. So this is the amount that you reject. So the amount that you reject should reduce your money. Okay, this is where you allot the share. So how much left? Okay, we have 16 just now minus 1. So we have 15 million left. So 15 million, okay, times with 80 cents. Okay, times with 80 cents, and you will get 12 million. Don't forget to transfer to ordinary share capital, or instead of finding this way, you can recheck. You can use by this way, 12,800,000 minus 800,000. It should tie back to 12,000. Okay. Next, preferences. As for preferences, I'm using pink color. You issue for 2 million units at a price of 2.50 ringgit, but you only receive 1.5 million. So you have an undersubscribe. You have an undersubscribe by 500,000. Therefore, amount that you receive is 1.5 million only. So you take 1.5 million times with the issue price, and you will get 3,750,000. So debit bank, credit preference shares. There is no reject and refund. So straight away allot the shares. Okay, 1,500. times with ringgit, okay, you get the same. And then we transfer to preference share capital. Okay, next transaction is bonus share. So the bonus share is made on OAC only, class. Please take note, it made on OAC only. So how to find the bonus share? The amount usually is not given directly, so you have to find based on the shareholding basis. Okay, follow the question closely. It is said that bonus issue was made to the existing shareholders who held the shares. And who held the shares? As at 1st January 2004. So this is the amount of shareholding on 1st January 2004. So this is the amount of shares held by the existing shareholders. 25 million. So you have to find the amount of bonus issue. It is said the basis is how much? The basis was 1 new shares for every 10 shares held. 1 new shares for every 10 shares held. Meaning you will take 1/10 times with 25 million. And times with 25 million. So you will get how many units, class? How many units? Okay, you will get 2,500,000 units. 2,500,000 units. And remember, you have to find the value or else you cannot prepare the account, right? How much is the bonus share? It is set at 1 ringgit. So you times with 1 ringgit. So equal to 2,500,000 ringgit. So this is the amount of bonus shares and you are using the retained profit for the bonus issue. So the retained profit will be affected lah. So you are going to take from retained profit. Okay, so debit retained profit 2,500,000, credit bonus issue, and debit bonus issue, credit ordinary share. You allot the share. Okay, last but not least, okay, is the issuance of debenture. Remember, there are 5 maximum of information can be found. Okay, we go for the nominal value. How much is the nominal value? 1 million. Okay, the next information is we need to know the issue price. It will issue at 94. How at 96? How do I know at 96? Because you are giving discount of 5%. Okay, next information is you need to know the nominal value of the interest, the nominal interest rate, that is 6%. And the effective interest rate 9%. And is there any issue cost? No issue cost. Okay, so we just have 4 information. 1, 2, 3, 4. Okay, no issue cost. So just straight away calculate for the fair value. 1 million times with 96. So you will get 967. Sorry, 60,000. Debit bank credit debenture. Calculate for the finance cost. Take the effective interest rate times with the fair value of the debenture. And you have to prorate. Why? Because your accounting period starts on 1st January, year 4, ends on 31st December, year 4. But somehow, the debenture is started on 1st June. So here, 1st June. So June to December, June counted or not? Yes, because it starts on 1st. June, July, August, September, October, November, December. So 7 months. That is why you times with 7. Okay, the amount of finance cost 50,400, but the amount that you pay 35,000. So the difference is charged to the debenture account 15,400. And finally, close the finance cost by debit the retained profit, credit finance cost. Okay, final one. Let's prepare the statement of financial position. So we will be based on this one. This is the old one. Okay, this is the old one. Or we call it balance breakdown. So you have to adjust one by one. Do we have adjustment for ordinary shares? Yes. We have adjustment for ordinary shares, preference shares, retained profit, inventories, no, current no, bank, yes. Okay, so ordinary shares, we have adjustment, retained profit. Okay, but don't forget, you have a liabilities. You have a liabilities. Oh, I have spelled it wrongly. Liabilities. You have a liabilities. Okay. What is your liabilities? The debenture. Don't forget, you issue debenture, right? This one. So you have 6% debenture. Don't forget to include. Okay, we go one by one. I hope you already know how to find the answer. So this is the final answer. How to find the answer? You take the old one, 25 million plus. Okay, we have adjustment here. Ordinary share capital. We have two transactions here. So this one, you will add 12 million and 2,500,000. So you plus 12 million plus 2,500,000. So overall, you will get how much? This one, 39,500,000. Okay, preference share capital, same. You do the same. Okay, you have preference share capital here. Credit shows increase. Credit shows increase. So 3,750,000. Okay, plus 3.75 million. So you will have 13,750,000. Okay, 13,750,000. Okay, as for retained profit, okay, look for the adjustment. One is here, debit retained profit, and one is here, debit retained profit. Debit meaning what? Debit meaning a reduction. Okay, minus these two. 2,500,000. Okay, minus 400,000. Minus 2,500,000 and 5.4K. Right? So let us check. Sorry, 50.4K. 50.4K. Okay, let us look the working here. Better working here. Okay, nampak? Minus this one. So you will get this value. Okay, non-contributing is a new one. Okay, in your old balance sheet or SOPI, you don't have any liability, so you have to add on. Okay, look at your answer. You have a debenture here. One is 960,000, another one here, 15,400. So you add up these two. Okay, and you get this amount. Okay, current asset, this one maintain the same, but there is a changes for bank. Many things shows that many changes. How to find the changes? Okay, let us go back to our answer. One, this one, add. 2, credit minus. 3, debit, add. 4, debit, add. 5, credit minus. So you have 5 transactions altogether. Let us check. 1, 2, 3, 4, 5. Yes, this one is the old balance. 45,700 is the old balance. This is the old balance. So you adjust for 5 transactions. How to know? Back to your answer. If you record your answer correctly, then the adjustment should also correct. So at the end, your total for bank amount is 62,375,000. Okay, so that's all about the discussion for question on issuance of shares and debentures.